Good morning, good morning, good morning. How y'all doing? How y'all doing? This is Yo Javi, and listen, I know I started a little bit later today. I had to take my son to the airport, and you already know how that is. Like, I thought I was gonna be back on time. I wasn't, but you guys know, like, either I'm gonna go live like a little bit later if something happens, or I'll make a post. If I can't make it, I'll make a post. But nevertheless, I love to take care of my audience. I love to keep y'all informed. I love to make sure that you guys know what's going on at all times. And again, if you don't see something in the community like the community tab, like on my channel, hold on, let me look this up. Again, usually if I'm not gonna be on, you're gonna see something on here. Like, let me show y'all. You could always check here, like if it doesn't show on your feed, you could just go to my post and just read them. I'll usually update y'all there. That's if you don't have me on Instagram. If you have me on Instagram, I definitely let everybody knows what's going on Instagram. That's like my bulletin board. That's where I just let everybody know what's going on. But all right. We have my man's Fernie. Good morning, Fernie. Good morning, Elias. My brother-in-law Elias is always supporting me too. And listen, today we're gonna go straight into it. We're reading, or we're going over the Candlestick Trading Bible. We are here in the market structure section. Market structure. We already went over how to trade trending markets, support and resistance levels. That's what we went over yesterday. And today we're going over how to draw trend lines. And now give me a moment, please. Okay, so let's get straight into it. Page 61. If you don't have it, I'm going to send the link right now in the chat. There it is. The link is in the chat for anybody that doesn't have it. And as people come in, you're going to have that there. So, all right, let's go. How to draw trend lines. 61. Like I always tell you guys when I do these streams, and I know sometimes we may have a lot of people, sometimes we may not. We're still growing, but nevertheless, I record. Like, pretty much I'm live, but I know it's recording. It's recording at the same time. So you could always review this information. If you did not make it to this live, you could always watch the video afterwards. So I leave it up. Here we go. How to draw trend lines. So let's look at the section. Okay, so only 2 pages. We're gonna look at it, and then we'll look at the charts, or we'll look at the chart ourselves. So to draw a quality trend line, you will need to find at least 2 minimum swing points. So already swing points, keep that in mind. And simply connect them with each other. That's it. This level, so at least 2. What's the requirement? 2 swing points. And if you remember what a swing point was, look, you have the trend, the direction that the trend is going into, but you get that swing point. It's a pullback. It swings, it pulls back. Hold on real quick. Okay, so yes, you have the swing point. It pulls back at the swing point. It pulls back, then it hits resistance or support, depending on if you're looking at a downtrend or an uptrend. So that swing point is where the market pulls back. So what does it say? It says you're gonna look for at least 2 swing points and just simply connect them with each other. The levels must be clear. Don't try to force a trend line. Yo, this right here is gold. Like, this is actually something that I didn't even really know about. Like, I did it by instinct. I didn't know that there was an actual way of doing it. And actually, I'm just going live on Discord real quick. I'm not live on Discord. Let me make sure that everybody gets the same opportunity to watch this stream. Okay, so we are live on Discord as well. So, okay, don't try to force it. We gotta find two, and actually I was gonna share this with y'all. Definitely, you guys should keep that. I just share that. That's something that I would write down. I will put that somewhere because that's it. I don't know. So the minimum swing, like, he just put it together in the comment section, but just separate them. All right. Okay, don't use smaller time frame to draw trend lines. Use always the 4 hour. Okay, so this thing wants you to use the 4 hour and the daily time frames to find obvious. Now here's the keyword: obvious trend lines. I will say this: I don't fully agree with this, but I do, because I'm gonna tell you this. Yes, the daily, well, the 4 hour time frame and the daily, that's gonna be the general direction of the market. But in those time frames, you could be in an uptrend, but then in the 1 hour, 15-minute time frame and the 5-minute time frame, you could be totally in a downtrend. That downtrend would be a pullback on one of these like higher time frames. You see? So yeah, so I agree and disagree, but we're gonna use what the book says, and then I'll show you like what I mean by a pullback. Like a pullback on a higher time frame could be a downtrend on a smaller time frame. So we will try to focus right now on how to draw them in a trending markets, or in trending markets. Our purpose is to identify the beginning of impulsive moves in a trending market. So that's the objective, the purpose, to identify the beginning of impulsive moves. Why? Because that impulsive move is the one that goes with the trend. If we are in an uptrend, right? If we are in an uptrend, it's the move that goes up. If we are in a downtrend, it's the move that goes down. So we want to identify the beginning, so we get in at that point. You get in at that point, you make the most money. So yes, this part here, it's useful because, and I use it, I do top down analysis. So understanding like a pullback on a higher time frame, that means that I could actually find the entry on a lower time frame, right? I was saying smaller, but it's lower. Hold on real quick. Okay, so sorry. So today might be one of those days where I have to like take a few more breaks. You know, when you have a toddler, it's like that. They require your attention a little bit more often. But all right, let's continue here. Let's continue. Okay, so let's see, impulsive moves. So our job is to identify the beginning of impulsive moves in a trending market. In the next chapter, I will explain to you in detail how to trade trend lines in combination with our price action trading setups. See an example of how to draw the trend lines. So you see, you got that swing, well, this swing point, right? Well, now technically here, let me see something. Okay, the swing point now, it's showing the swing point there, but hold on, this is, let me just make sure I got this correctly. Yeah, the impulsive move would be the one that's going with the trend. Now they're doing this at the beginning of the impulsive move. Let's just make sure we got everything right. You see, in this uptrending market, the swing point is the pullback, pullback, and then I mean, in my opinion, they're both sides are swinging. Like, yes, this is swinging at a support level, support, but it is turning around there. That's where the impulsive move is starting. But technically, that's a retracement. You see, impulsive move goes through the trend, it retraces. So I just want to make sure that we're understanding this correctly, because here it says, hold on. Okay, it says you will need to find at least 2 minimum swing points, but if we go by the chart above, these are not swing points. If we go by that chart, but for me, in my opinion, the swing points is just anywhere where the market just turns around. Like, yes, this is a retracement here, so technically a swing point will start here and then it just goes up. It has the, well, this is the retracement, the impulsive move, right? So I'm just gonna call them swing points on both sides, or we could use our friend ChatGPT, right? Let's do that right now. What is a swing point in trading? Is it on both sides, the impulsive move and the retracement, or just at the retracement, about the retracement level? Okay, a swing point in trading refers to a pivot area. A pivot is pivoting, right, on a price chart where the market changes direction. These are typically local highs or lows, so the highs or the lows, and they are used to identify market structure, trends, and potential areas of support and resistance. So you have a swing high, swing low, right? Okay, a peak form when a price candle is flanked by lower highs on both sides. Well, those are the swing highs and swing lows, but let me see. Swing points can appear on both sides during impulsive moves, trending moves. This show the directional bias of the market, okay? During retracements or pullbacks, this reflect temporary reversals against the main trend. So yes, on both sides, and they form counter-trend swing points. All right, I'm just gonna go swing points. So pretty much, because we're gonna connect. Why am I going through that? Because we're going to connect this swing points on the top and swing points at the bottom, pretty much. We'll keep reading and then we'll go through this on the chart. Okay, when the market moves this way, so he's doing it at the top, okay, because this is a downtrend, and then he's doing it at the bottom for the uptrend. When the market moves this way, trend lines help us to anticipate the next impulsive move with the direction of the market. So at the swing points, right, is doing the trend, or that's where the trend is at. As you can see, the market respects the trend line, and by drawing it the right way, we can easily predict the next movement upward. So okay, so they're doing it to predict the next move, the next impulsive move. That's how it's being used here. Like, they're not doing it on both sides, like on the top and the bottom. They're going with the direction of the trend. So if it's a downtrend, they're putting it at the top to pretty much like to identify where the next potential impulsive move is gonna go, where the next down move. is going to happen at. Yeah, you see the next impulsive move with the direction of the market. This part right here. This part, definitely, I'm going to share this with y'all. Trendlines help us to anticipate the next impulsive move with the direction of the market. When I share this on the comment section, it's just putting certain words together, but you could separate them yourself. But all right, we'll continue. So trendlines help us to anticipate the next impulsive move with the direction of the market. So let's look at another example of an uptrend market. Okay. By drawing it the right way, we could easily predict the next movement upward. This is what we can say about trending markets. Hold on. This is all what we can say, not see, but say about trending markets. I think it's clear and simple. Now what I want you to do is open your charts and try to find trending markets, find previous swing points, support and resistance, and try to find trend lines as well. This exercise will help you understand how trending markets move and how to predict high probability entries in the market. Okay, so I'm gonna do it by the book, and then I'm gonna do it the way that I know, which it's halfway there. The book is only giving you the top or the bottom. I usually do both. So, but we're gonna start with just one. So first, we're gonna look for an uptrend or a downtrend. Okay, so I have one here. Look at this. Starting from this swing, so I'm gonna do circles at the swing points. Now, why am I not doing this one? Because if you was to throw a line, right, it wouldn't be straight. You would have to do like a V. So I'm doing the swing points that match, like that follow the same level. So pretty much, it's not perfect, but I mean it's not perfect, but it does show the trend. You see that? Like it shows you swing point number 1, 2, 3, and then the trend ended right here. Once candle started closing on the opposite side of this trend line, that trend is over, at least at that point. And I'm going to share that with y'all. So, swing point. Let's make that a little smaller. Come on, Bobby. Hold on real quick. Okay, so one more swing point. And this is a trend line. Just done, puppy. Okay, trend line, boom. I'm literally sharing this with you. Like I'm taking not even a screenshot. I'm getting this as a link, copy link, and then I'm sharing it here. Okay, I just shared the link. So that's how you do it. Like you're finding the swing points. And you know what? And I'm not gonna do it the way I do it, because technically, if I was to do it how I do it, it wouldn't be. It's not necessarily perfect. Like it's not by the book. So for example, usually what I do is I I do the like this one, this trend line. Now I did it by instinct, and I was doing it like this, but I wasn't thinking like, oh, look for the swing points. Like I wasn't thinking like that. Now I would see where the market would kind of like just pivot, right, where it would swing, and then I would do another line like this. Now this is not perfect because the market does come out and come back, and it comes back in. So maybe I shouldn't be doing the top line. Why? Because it's not really a specific reason. I guess because the market, I'll say this, the market could potentially just go up as far as it wants, come back, respect the trend line, go like just a little bit up, then go like very far out, come back, respect the trend line. So we're only going to worry about this one. This is the one by the book. We're going to worry about that one. So that's one trend. There's another trend here, uptrend. So I'm going to circle the swing points. Now, this one is like a little bit too deep in, so it's probably not going to be part of it, but so yes, this one is too far up, not really part of the trend. Like yes, the market swung there, like it pivoted there, but really the trend is still here, and I could bring it closer. We could keep this one here. We could keep it because it's still riding the trend. Like what you really want to see is when the market is riding that trend. Like you want to see that. So you see, the market doesn't move perfect by the book, but generally this is what you're doing. You're not overthinking it. You're not forcing it. Like I'm not forcing these swings here. Like I'm not trying to do this. I'm not putting it in the middle there. No, I'm just putting the outer wicks right there, just the outermost. And if you want to say that one doesn't go, then we have 1, 2, 3. You see, these 3 are not forced. Don't ever try to force it. So we got those 3s. Any questions up to that point? Hey Vashi, how you doing? If you are drawing a channel up or down, but the actual pivot point is the lowest or highest a reversal candle went, it makes sense. Yes. Yep. So yeah, I'm glad to see you here. I see we have 4 people connected. Good morning to everybody. Like I said, I got in a little bit late because I was taking my son to the airport. You already know how that goes, but we're here. If something ever happened, as I said earlier, that I couldn't make it, just go to the community tab in my channel. So like right here, go to the post tab, and you're gonna see something here. Like if you don't have me on Instagram, you're gonna see it here. So like yes, if you see that I didn't connect at 8:30, it's 8:40, you don't see anything. 8:45, you don't see anything. Just go here, check it out, and I will try to. No, I'm not gonna try. I'll get into the habit of like, well, it's not 8:30 because next week we're gonna change to 7:30 a.m. New York time. But if like within the first 5 minutes, if I'm not in, I'm just gonna put a post here. Like I'm gonna post something. Just so that I keep everybody in the loop, so that you know what's going on. But all right, so yes, that's the trend line. We're not forcing anything. Let me show the screen again. We're not forcing these pivot points. We're not forcing them. Even here, like look, there is a downtrend. I want everybody practicing this. Like the better you could read the market, the more effortlessly you could read the market. Even I don't care what strategy you learn, because it's all based on this stuff. It's all based on market structure, like knowing how to spot the trends, like knowing all of these things. The better you could do this, like the better it's gonna go for you. So like the easier time you're gonna have. I'm not saying the easier time you're gonna have necessarily trading, because emotions are still something you deal with, but at least you're not gonna be like doubting the technical side. At least, like, let's say if you're dealing with like revenge trading, over trading, tilting, all that stuff, at least you're like, okay, I don't have to work on the technical side. Like I know that part. I mean, we always should stay sharp. We always should be learning, but it's not like you don't get it. It's not like you don't dominate it. You're like, okay, now I just gotta work on the emotional side. But imagine battling with both. Like, you're dealing with the emotional side of trading and you don't really understand certain things. I need everybody practicing this stuff. I need everybody, like, if you are locked in, I need you to be literally, like, whenever we finish like one of these chapters like this, study it. It doesn't have to, I mean, if you can do it right away, even better, because you have the information fresh in your mind. But if you can't, at least the same day, at some point, dedicate 5 minutes to the chart and like practice, you know, get this down. So okay, so here, first thing, like me personally, I draw the trend line. I'm gonna show you something. Look, this is why I don't necessarily do it by the book, because, for example, this whole thing is a downtrend, the whole thing. But look at what happened. If I go by the swings, I will have to do this. Like, look at this. I'm just gonna draw like the main ones. I'm just gonna draw them. All right. If I was to do this, if I was to do it perfectly by the book, I would technically have to do something like this. Like, okay, let me connect this side and then this side. Maybe this whole thing right here. I mean, maybe that and then this. I don't do that. What I do is the following. What I do is I just do this. Like, from the first like swing point or swing low, I go straight down to the last one. This is what I do. This is what I do, and I'm not telling you have to do it this way, but technically this is still the downtrend. Of course, the market flipped. It broke out, came back. That's how I do it. But you know, because the markets, they don't move how the book shows it all the time. It doesn't move perfectly. You're gonna have moments where the market just sells off and it regains like some of that, you know, some of what it lost, right? I mean, it's not losing anything per se, but the drop, it's just retracing, then it drops again, retraces, and now it retraces more, you know, with that trend. So this is how I do it. I just go from the first swing low to the last one, and at the time, because remember, when we are looking at the market, you don't see what's coming. So let's just say that right now I was up to here. At that point, yes, I'm connecting the swing points. Like, I'm doing this, all of these swing points, I'm connecting them like this. Now, when we do that, if this happens, now I'm looking at a market that's possibly going to move sideways, it's going to range, or it's possibly just going in an uptrend. It's possibly doing this. That didn't happen. So, but if I'm looking at the trend, if I was all the way down here, then I would just do that. I would go from the first to the last. That's what I do. Now, if you do it by the book, you will have to do this. You see? And maybe even ignore this one. Just connect these three. That's part. And technically, this was one downtrend. Then the market rested. You see the market resting here, moving a bit sideways. Then it continued. So from here, you could connect. So technically, you had like, after that rest, the trend continued. This is probably a better way to do it, because technically you have 3 different markets. Well, you have a downtrend, you have a sideways type of market, and then it just continues the downtrend. So it's trending again here. And not perfectly though, because look, you see that? The markets, if they move perfect, everybody will be making money. Your job is really to see what the market is doing at this time. When you're about to trade, you have to see what is it doing right now. Like, you got to be able to tell. Any questions? Bashi says, I'm good. Had a few little breakthroughs on the charts. Okay, yesterday boosted my fire a little. I needed that. I love to hear that. And I love when that happens. Like, even to me, when that happens to me, I love that. When you get that whoa, hold up. Like, I see this. Like, This is so clear to me now. That's a beautiful moment. Then Vashi says, I keep checking the 200 EMA to see if we are still on that or in that trend, because watching on the 15-minute and lower, we can confuse ourselves. We is me. Yeah, I mean, again, yes, there are different time frames for a reason. There are different time frames. Let's see. Okay, here. For example, if I'm looking at the 200 EMA, let me get rid of that. I'm going to turn off all the other ones. I'm just going to keep the 200. If I'm on the 4-hour, if I'm on the 4-hour, like let's just look at right now. We crossed the 200 EMA. It's on the other side. So technically on the 4-hour, like we're not taking buys here, right? That's on the 4-hour. But look at what the 4-hour is doing. It's pulling back. So if in the lower time frames, I see that we are above the 200 EMA, I could consider taking buys because these are my entry time zones. The 15 is my entry time zone and the 5. So the 200 EMA really, yes, you got to know where you're at in the market at all times. And I will say in most higher time frames, right? But once you're going to take the entry, don't go against the EMA unless you're doing that with a specific purpose. Unless you know, like, okay, I know this is a counter trend setup. I know that for this time frame, I'm going against the trend and I'm okay with that because I see something. If you see something, by any means, take it. That's what develops your edge. You seeing something in the market and taking advantage, that's your edge. So I'm not going to tell people to never take counter trend. If you see something, accept it. Yes, you could, there is a high probability of you losing. Yes. But if you saw something, that's yours. Take it. If you lose, that's okay. At least you took your opportunity. So yes, 4-hour, we could be below the 200 EMA. The 1-hour, we're definitely below. The 15, we're below. And on the 5, this is my entry time frame, we are below. So at this point, I would just be looking for sales because all of these time frames agree with each other. That's cut clear. Like, that's beautiful. You don't even have to question it. This is all in my favor for sales. All right, hold on. I'm just checking something real quick. Okay. So yes, I'm gonna connect one more. We're gonna do one more. Any questions? Let me look at my phone. It'll be a little bit easier. Any questions? Any questions? Any questions here? We're talking again about how to draw trend lines. If we are drawing a trend line for a downtrend, we're doing it at the top because we want to see where it's all about finding the impulsive move. That's why we're not doing it at the bottom, because if we do it and I'm not saying you can't. If you want to come in at a retracement move, if you want to go against the trend, that's on you, boo boo. Like that's on you. You could do that. Like, the beautiful thing about trading is that you could buy or you could sell, and you could do it at any time. Does that mean you should? Not all the time. But if you want to do that, that's on you. The book doesn't talk about that, but just because it's not in a book doesn't mean it's not valid. Like, we learn from books, but we develop our edge from experience. At the end of the day, no book is gonna give you an edge. It's not. Your own experiences. Like, that's my opinion, my belief. That's my belief. So I'm not saying that is a fact, but that's my opinion. So yes, again, if you're doing it for a downtrend, you're doing it at the top. You're drawing that trend line at the top. You're doing it at the top. And if you're drawing trend lines for an uptrend, you're drawing that line at the bottom because you're looking for that impulsive move. You see that? Hold on real quick. Okay, you see that? So that's what we're doing there. That's really just it. That's it. I mean, we don't have to overcomplicate it. It's not complicated. It might take practice. It might take practice. I'm not saying it doesn't take practice. When I say something is not complicated, you still have to practice. But what I mean is, I don't have to yes, I like to teach in a way where everybody understands. But for example, real quick, you might have situations where, let me see. Well, this is a downtrend, so we will do it on the top. As I said, it's not always going to be perfect, but this is what I do. If it goes above it, that's possible. That, a downtrend could break. This is breaking out. This is a breakout. It's breaking out. Now it's riding above, it's riding above the trend line. Then it goes back down into the trend line. So when I look at things like this, I could look at this big dip right here, this big melt, like the market melting there. And if I see that, as I'm back testing, if I see this happening a lot, if I ever catch something here, I could expect the market to possibly just melt. What happened, Papi? What happened? Well, I gotta go. Any questions? I do have to go. I gotta take care of my son. He's not feeling too good. He's not feeling good, but I'm gonna take care of him. Any questions before I go? Facts, the trend is your friend, but that counter trend could be the man. It can. I have won counter trend moves. You can win counter trend moves. Would I say take them all the time? No, I wouldn't say take them all the time. But yes, thank you, the one-stop trader. Thank you. Yes, I'm gonna take care of him. He's not feeling too good, so I appreciate everybody that showed up today. I wish I could stay a little bit longer. I can't. I'm a father first. So yeah, this is Yo Javi. The world